I think we're live. Mic check, mic check. If you can hear me, welcome. Good morning. Good morning. It seems like we are live. I'm just gonna give this whole thing 2 seconds and just let everybody know in the public Telegram group that we are live. If it's your first time joining us, good morning. Once again, please don't forget to subscribe to the channel. What we do in the morning is basically I walk you through live. Sorry, gotta kill the feedback. I walk you through everything that I see in the morning, right? During the London market. We keep reviewing setups. We stay patient. You know, some of these trades will play out. When they do play out, we want to keep track of everyday market structure. I must say, yesterday I was surprised how, because I've been doing these, module 3 type of setups, intraday type of trading, how it's so easy to forget, the bigger picture. It almost literally reminded me why I became a swing trader, right? You keep trading a bullish dollar, and then when you look at the bigger picture, I looked at it last week with you guys, and you look at it the previous week, you'll be so shocked how quickly structure changes over time, right? There's nothing too incredibly out of character with the dollar, except for the fact that, my goodness gracious, we are so close to a monthly supply, right? It's interesting. I find this mind-blowingly interesting. Let me tell you why. We are literally outside a governing supply, right? And with 2 of them, right? And if you don't see 2 and you only see 1, then it's one big one, right? Whatever makes sense, right? But we are very close to that. That's number 1. Number 2, we know that the Fed has said, look, we will. You know what Powell said, and I should have done this before conducting, a traders war room. So I'll just quickly double check this for you right now. But what I find fundamentally interesting about the markets is DXY is about to get to a supply. EURUSD is about to get to a demand. So in a normal world, we are about to receive what is known as a change of money, right? So that's number 1. The change of money is about to occur. But at the bottom of all of this is Fed has said, look, we know we need to get an interest rate hike. So there are a lot of things that are bullish for the dollar. So is this a setup for just a quick pump for a sell? Or is this one of those moments where markets are really going to fight through a supply to break it? It's interesting, because if that's the case, then what does this mean about the EURUSD demand that price is at, right? So it's like, I started racking my brain about this kind of stuff yesterday. Do I really want to sit and forget? I mean, under normal circumstances, this wouldn't be a problem. Under normal circumstances, I wouldn't even be second guessing a single setup in front of me, but just trying to understand the logic of the market. And then, in the Fed talk yesterday, because I didn't finish it, how many Fed rate hikes? Sorry, I'm just Googling this for you because I found it so interesting. Fed rate hikes happened in 2004. He brought up 2004. Powell said, look, man, we might have to play it the way we did in 2004. Do you know what they did in 2004? Show you the stuff. This is crazy, right? So why did the Fed, okay, so I Googled how many Fed rate hikes happened in 2004, because he kept bringing that stuff up. He brought it up like 4 times, right? Remember, markets pricing everything, all right? So that's rule number 1. Number 2, remember, doesn't matter what your mentor told you, at the end of the day, you have to trade like banks. If you want to edge out more profitably, you have to operate like smart money. Now, we want a Fed interest hike. I'm not going to pull up the whiteboard and draw inflation, price, wage spiral, all that kind of stuff. I am literally going to give you guys a simple review of the stuff straight from Google. Fed increased the interest rate in 1 year, or at least 24 to 26, in 2 years, 17 times. 17 times, right? At a consistent 0.25%, basis point. And this was to kind of like curve out the crisis that the tech boom had started. And he literally referred to 2004. 17 times is a little bit crazy. But how else? I mean, I'm never sure if the small snippets of this information, how deep you guys are in the zone with this kind of stuff. But you have to remember, inflation is currently roughly at about 7% in America, right? And Nero, you're in Africa, blah, blah, blah. Why always America? Well, because I'm a trader, right? We focus on global stuff, number one. Number two, because the whole world is following this trend. So if your inflation is about 7%, but normally what is correct for your annual inflation, it needs to be about 2%. You can say there's a big problem, right? You can see that this is a massive gap, within the inflation, right? And so you want to strengthen the dollar, you want to curb out. We now know what caused inflation: QE, COVID, printing money, all sorts of bad policies, good policies, trying to save the world policies, etc., unemployment numbers, the whole mess, right? And so you want to start increasing this current interest rate, right? What I think right now in America, it's 0%. I think that's the interest rate. I could be wrong. Wait a minute, something wrong with my screen. I apologize. Let me just quickly fix that. Right. So I think you guys should be able to see my screen now. I should remember not to drag it and actually properly select it. I'm just gonna wait to see what it looks like on the YouTube feed there, and then I will sort you guys out. Now it doesn't even look like I'm live. Am I still live? Am I live? Can you see my screen? Sorry guys. Can someone just let me know in the comments there if you can see my screen? Trying to catch up with me. Right. Okay, perfect. Yes, I am. All right. Sorry about that. Right. So I think, in general, right, the interest rate right now in America is at 0%, right? I mean, I could be wrong, but there would not have been able interest rates in America. I don't think they would have been able to kind of like, do all the stuff that they did during COVID at any other level here right now, right? So I'm just running a quick Google search in the background. I do think it's at 0%, right? So how are the interest rates set in the United States? If I can't find it, I'm gonna move on. Oh yeah, okay, so there we go. So it's about 0%, right? So right now with 0%, and they want to start moving up. So they're gonna move up first by 0.25 basis point. He said he's okay with that on the 16th of March, right? There are some people within the Fed who think, no, man, you got to go 0.50%, right? Half a percent point on the first one. We need to catch up with inflation, right? So that's the whole point. So you can imagine the next, chair meeting, I think there are about 8 of these FOMC meetings in a year. It does 0.25% or it does 50%. The whole point is to catch up with inflation, right? And Powell, and really not Powell, but another lady, I've forgotten her name, who's inside the FOMC committee, she is more dovish. Like Powell's more hawkish. Hawkish means up, dovish means down. She thinks, look, man, let's not worry about inflation right now. And right now is between January 2020 to about June 2022. Sorry, January 2022 to about June this month. So for the first half of the year, right, there's nothing we can do. I think those are the words she used basically. Like, look, inflation is bad. There's nothing we can do. Let it go up. And then as we steadily means at 0.25, every meeting between now and June, you just keep going 0.25. There's nothing we can do about inflation tomorrow, right? NFP numbers are done. They're coming out tomorrow. CPI numbers for next week, Thursday, are done. You can't do anything about them. CPI for April won't change. Supply chain, war, there's nothing. So between Jan of this year up to June, let's just quickly, steadily, every time we sit up, let's not do anything drastic. Let's not do anything too crazy. Don't go 0.50 per point. By June-ish, we should start to see, what would call a flattening, right? Where inflation is slowly but surely starts to come under control. So you're looking at June, July, where all of a sudden your charts should start to show you some type of, leveling out, right? So I'm just working out the long-term argument here, okay? And then by August of next year, we should start to see deflation, right? So all of a sudden, all these little small steady basis points, like I showed you how between 2004 to 2006, right, there were 17 interest rate hikes. all of a sudden, right, we should start to see some type of balancing out, deflation, as all of a sudden they finally have control over this beast, right? So what this does is, number one, it pushes off a lot of market uncertainty into the future, right, which could be good or bad. But more importantly, I think from a Fed's perspective, it buys them a lot of time. Now remember, everything done in the FOMC is done by vote, right? So this lady that I'm referring to, whose name I've already forgotten, is just one person, right? It's not the what Powell's going to decide on, but it was just quite a for me fundamentally quite an interesting take on her entire perspective of what is the problem and what needs to happen. And so only time will tell, right? But just keep your eyes glued on that. But what does it mean in the long term, right? Dollar is about to hit a supply. As you all know, EURUSD is about to kind of like bounce off a big demand, right? Will markets change their direction? Will markets eat out these levels? This is the kind of things that are currently consuming my thought process right now as we really start to understand the impact of the war plus inflation and everything else, right? So it's just some stuff to kind of like keep in mind of. But in the smaller time frames, and since we're already on the DXY, we will do our usual routine. I'm just saying, just to wrap up this conversation, looking at how the dollar has reacted, the dollar has been very good at removing supplies from June last year, right? And we know why. We won't waste time talking about that stuff, right? And it's going somewhere. Markets are not random. They have a destination, right? So the recent supply, market inefficiencies, they always get filled, right? This is a powerful, simple candlestick reading technique. If you're in an uptrend and you get a wick like this, you can buy the very next day, the next week. You have to find good levels to buy. But you can see, right, somewhere at the beginning of this candlestick is a green zone, which means there's a demand there that allowed for this wick to level up and just push forward. This is the weekly time frame. That's why I'm talking about the weekly chart. On the daily, we now know that there is nothing in the world. I mean, this is definitely a gap. Like price has just been gapping nonstop. Nothing in the world to stop it on the daily. No supplies anymore up until we get to that 98 level, which is a supply, right? So today we've got NFP. This is what it looks like, H4 time frame, right over there. There's that gap that we spoke about on the 2nd of March. This is literally 2 days ago, guys. The dollar has exploded 2 days ago. I keep telling you that gaps are phenomenally powerful. They're like strong signs of market imbalances, right? I think last night, if I'm not mistaken, there was an explosion at some Ukraine nuclear plant, right? The articles don't seem to say it's Russia or part of a fight. All they said was, your radiation is under control. Thank God, because you guys would know that nuclear is a dangerous thing. So radiation is under control. But obviously, such headlines, if we come across such a headline today, would send money straight back into safe haven flows, like 100%. I just want to quickly see. I can see that the dollar is obviously currently a chosen winner, right? And you can see that gold, while it hasn't come back, for those of you who entered all the way down there, right? This is the second time I'm telling you that this is a good place to take profit. So if you missed the first take profit, I hope to God you are now out of that gold buy, or that you've locked profits and you've accepted any type of retracement, right? Because if NFP comes out strong and dollar needs to rally, gold might need to take a retracement, right? So I would hate that those of you who bought very nicely here during the week, to start to lose out on your profits. But this is literally the gold target for the week that's been done in front of you right now, right? So I do suspect that there's a lot of elements at play, but please don't forget, as we do this every morning, it is crucial, guys. It is absolutely crucial. Please do not forget the bigger picture. Don't forget the bigger flow of money, because that's where smart money is. Smart money is not in the front lines. They're not fighting a single war. They are moving money up, right, left, right, and center, right? And I think a big decision is about to be made, in this particular month, right? If you'll allow me quickly, because I found this information interesting, that Powell said in 2004, blah, blah, blah. So I just want to quickly go to the DXY on the monthly, or maybe at least on the weekly, just to see what that looks like. I want to see what that looked like for the dollar in 2004. Why? Because we could learn a lot from price. So it was 2004. which I think, I wouldn't know the exact month, and I don't think there's enough time for us to start a whole Google search for the next month. But it would seem to me that the month of 2004 starts here, the year of 2004, right? That's May. So this 2004, right? Big dip, that's December where I am right now. That takes us to November 2005. I think it said up until 2006, right? All the way down into Barack Obama's demand, right? Then when Obama comes in as a Democrat, he levels out his demand holds, and then price explodes all the way to Donald Trump's thing. So between this period, hey, man, this is interesting, guys. Between this period, right, this whole period here, which is about 2 years of trading, there were 17 interest rate hikes. And you would fool me if you told me this, because I would not believe you until I saw it for myself. 17 interest rate hikes, because even during those 17 interest rate hikes, a monthly supply somewhere was clearly in charge, and price nonetheless kept falling. 17 interest rate hikes. Right? I'm not saying there are going to be 17 interest rate hikes in 2022 to 2024. I'm simply saying that Powell said there's no need to panic because of a war. Our inflation problems were always here before. They might even last after, depending on how long this war lasts. So the best thing is to allow for cool heads to prevail and to continue with a steady plan. That's what the FOMC say. And a steady plan, in my humble opinion, to me, if I go to the governing time frame of the dollar, a steady plan means just do what you're supposed to do, right? Follow in suit. That this is the DXY chart from the beginning of time. Markets, those of you who've done my module 1 will have a nice look here at the inception of the chart, which is about in the 1985, really at the prime of that whole neoliberal stuff, right? You don't have a major turning point, but you do have your first drop. This becomes a massive turning point for price in, say, about February 2002, and markets were in a long-term downtrend from February 2002. Those of you know there was something called a tech boom market crash in the year 2000, that 10-year time period, and all the way to the market crash of 2008 when Obama gets elected. The dollar was nonetheless in a downtrend. So all those interest rate hikes, while they might be good for a currency, were only priced in after this market finally found a major turning point at the bottom. And I'm bringing this to say, wouldn't it be interesting that we are now approaching a governing supply? That's what I would like to say. Interesting because at the beginning of last year, when I was reviewing the dollar, and the fact that price really took time to leave this demand, right? It made this, at play, right? We are now in the world of digital currency, the world of crypto, outside of safe haven value, right? The dollar is literally, losing value in many ways. Shake my hand, Sareed, man. Shake my hand, everybody, right? So this is just a long thing to look about, right? So anyways, back to our usual morning routine, ladies and gentlemen, right? Let's go quickly refresh this. Pre-markets, I'm sure we're down. Pre-markets were down. Oil did retrace. Nasdaq down. It's pre-markets. We'll see how it goes. What's interesting is the Asian market, because that was quite active and it just ended. They ended down, right? Hong Kong, Japan dropped more than 2% as the Asian stocks slide. Investors monitor Ukraine updates, right? So Ukraine is still there. Russia attacks. There we go. So it is a Russian attack. So they literally attacked a nuclear power plant, right? And you guys know nuclear is the final, death sentence to all wars, right? So this is just like, now they're just playing with fire, right? So as far as I know, there was radiation was put under control, but this obviously set markets running, all right? The world could be at the brink of an energy crisis, right? Reviving the 1970s, which is a brilliant market case study, but we'll get into that maybe in the war room. All right, so the Asian markets last night lost about 2% in value because of that one attack, right? There's not much outside of that news headline. So let's quickly jump here. Right, I'm just going to quickly refresh for you as well, and then we can kick it. Right, Moscow Exchange reportedly will be closed again today. In fact, up until sometime next week, which I think is just wise. I mean, everything is just worthless now. Their stocks are down and they started barring people, foreigners, basically from selling their stuff. I think almost 10 days ago, right? Germany trade balance, that's fine. A couple of light releases to move things along in Europe, right? All before the US non-farm payroll report comes in later today. And that's a big good. The market mood is looking rather pensive. That's negative. Though not all asset classes are reflecting such caution, okay? The dollar is holding up. We know this. Trading more mixed, but it owes to added weakness in the euro. Euro is digging down. I did tell everyone in the public group, don't be in a rush to just buy because we're in a demand. Do a clean multiple time frame analysis, and you'll find that there's a daily demand a little bit inside. Let price drop properly, right? Before we even make that. But also let's stay sentiment aware. All right, bond market, we don't really talk about that. AUD looks to solidify an upside breakout. Yeah, it does. And today is NFP, so that's quite interesting, right? AUD should be scared of a positive NFP. AUD should be starting to look for sell setups. But if you will look at it, you'll see there's like an incredible break of market structure and a push to the upside. Granted, our pending order is a little bit higher, on AUDUSD, right? So this strong push to the upside is still there, right? And this is it. So this is what I was telling someone who asked me yesterday to quickly review AUDUSD, and I said, look, if you're a cowboy, you can take this there, but I pulled up my live account and I showed them that within the 365 students have the master spreadsheet, that within our spreadsheet, our pending order is not up here, it's a little bit higher. And the reason for that is this is an arrow, man, it's so strong. There's another bullish engulfing pattern. I'm actually like, after NFP today, just depending on how NFP goes, I might even be in the mood to delete any AUDUSD pending order sell setup, right? Market, I hell bent on pushing up, and I honestly still have not yet recovered or figured out why, right? That's a nice place to actually try and sell somewhere up there. I haven't figured out why. What's the strength between AUD, except for the fact that maybe they're moving around the sentiment, or they just completely disconnected from this. I don't know, right? But anyway, stock trading on Moscow Exchange continues to be closed. Ukraine says fire at nuclear plant has been extinguished. So this is where I found out that radiation was under control. President Zelensky says attack on nuclear, facilities could be the end of Europe, right? So this is like another call for help. EURUSD down or up? Well, it's down now. EURUSD, someone's asked me, EURUSD down or up? EURUSD is down now, but is now at a probable buying zone. But the buying zone is very big, right? I'm explaining it this way because we'll have a look at it. I'll go to the chart, so just stick around. Just give me 5 minutes and I'll go there. Because I don't think you're a 365 student, so I want to make sure I break it down properly for you. Right now, Russian military attack Europe's largest nuclear plant. Okay, we get it. It's all about the plant, right? So let's move on. Right, so we're obviously going to have a mixed bag morning like this, which is normally better, right? Normally it's just all red, right? So you've got your healthcare stuff doing slightly well on the day, but for the most part, your mega caps, are all down, so they're gonna, pull the stock market with them. Yesterday, I think before I went to sleep, Bitcoin was down as well, and that tech stocks especially are extremely now married to crypto, right? They move in the same language, and this is interesting, guys, because yesterday, those of you who know, number one, you would know, I told you guys that there's a strong supply there. I told you this, so it's not a surprise. But if you're bullish on Bitcoin, you'd also know that it's not a surprise why price is dropping. Price might be dropping to retest that, right? So this is a very risky buy, in my humble opinion. This is the same person who has been very anti, taking any buy trades on Bitcoin for a very long time, right? I've told you guys there's a strong supply up here. It broke one demand, it took out another demand, and it just didn't complete the slow. So this is what a lot of technical people are relying on, that they all of a sudden their Bitcoin is creating higher lows. And yeah, that's one argument, but for that picture has to be complete. Price must also complete higher highs. It can't just create higher lows, it needs to create higher highs, right? So if you print it like this, then these are equal highs right now. So I'm not yet convinced, right? So you need this to happen, and then that, and then Leo will be like, okay, I'm buying Bitcoin now. for trade, right? For investments, I never care about the price. I buy because I dollar cost average in. The cheaper it is, the more I buy. Simple math. But Ukraine, as much as they need a lot of help in Russia, did pull a crypto rug pull, and I'm not shy to address that. Right? They did kind of like pull money out of investors and break a promise. We understand that they are in war, but I don't think the markets like that. But I think it's also a combination of a lot of things. Risk sentiment has changed, right? So we're gonna move on from all of this stuff. News headlines. Everything is just completely wrapped around nuclear. And then we're gonna now start to map up some trade ideas for the day and see what's going on. So you can see Euro is up, USD story is up, and Euro is down. So Euro is floating down, but in a buy zone, a monthly governing buy zone. But it could take days, if not weeks, for buyers in there to kind of like, and I actually haven't looked at COT report in over about 10 days. So I'm a bit behind on that kind of stuff. But I'm not in a rush to buy Euro. I'm actually going to wait for NFP today. I'm going to wait to see all the setups. I'm going to wait for crystal clear clarity and then take the markets by storm tonight, Friday night, or Monday, right? Set up some pending orders on Friday, or actually do a full war room now that we've got the report we've been waiting for, etc. But your risk assets, Euro, Pound, AUD, breaking, just doing its own thing. AUD, NZD, it's like Warren Brothers, right? So there's going to be a beautiful sell somewhere here one day. And if we come to the client sentiment and we're looking at trade ideas, right, you can see here AUD, USD in general, everyone is bullish, right? Every single person is bullish. And because of that, some traders who are contrarian like me are looking to sell. With positive ADP on Wednesday and initial jobless claim down and fear sentiments, what might be the implications of NFP today, right? Thanks, man. That's literally something I'd like to cover. Good question. Right. So I'll get back to that. So I'm just going to make the point here that, for the most part, if you're looking for trading opportunities, for example, there's a potential sell. According to this is not according to me. I'm just saying contrarian traders who like to do things against retail traders, which is pretty much how markets operate, are looking at sell opportunities across all risky assets, more Euro AUD, Euro CAD, NZD, Pound AUD, Pound CAD, right? Most of this stuff is looking for a sell, Euro Swiss franc, Euro Pound. And I can see they've shied away from a lot of USD pairs. And I think the reason for that is because the USD setups don't make sense. Like AUD, USD is so strong. USD, JPY currently mixed, right? You got, well, not really. I mean, more people are selling, right? But now let's look at charts and then come up with a couple of things. When it comes to NFP, my charts to look at, number one are DXY, which we've done together, right? So we've got a strong dollar making its way up to the moon, right? If we come H4, H1, you will see another gap. So now let's study gaps. We don't have to study them, but let's just acknowledge them, right? There was a beautiful gap here that markets formed that we spoke about the last time, whenever this was. And then we spoke about how the demand below is a strong one that created a gap, right? Because markets closed here on a Friday, and then markets opened here on a Monday, and then these were the buyers we were supposed to catch, right? That made a lot of sense. We spoke about them. The markets did the exact same thing 2-3 days later, right? This was literally on the 1st and on the 2nd of March, markets came down, and on the 3rd of March, which was yesterday, markets did the same thing to structure, opened up with an upward gap based on some other bad news in the world, safe haven flows, created a gap, and I've marked where the demand was that created the gap. Markets did not have time to come fill that gap. We know they will, right? We know that price leaving gaps nonstop is not a good thing. Markets will want to fill that gap, but instead created a nice landing pot here and went up. Didn't have time to come back and make contact with this demand on the 1 hour time frame, and now price has inadvertently once again created a new market gap, right? And I would never buy somewhere up here because I know that there are better lower buys down there, right? To almost equalize itself, there was a mini supply, but price is testing that right now, right? And I'm pretty sure by the end of the London session today, this will either hold or break, right? I'm leaning more towards the breaking side of things because clearly gap trading right now for the dollar is strong. So if dollar is strong, the other lady or gentleman, I just don't know, who you are, then you have to think about what does this mean about Euro USD if dollar is strong, right? If dollar is strong, EURUSD is going to keep falling and tanking, right? Which is what we've been talking about in these morning sessions nonstop, for the last couple of days. So there's your EURUSD, moving in line, with the perfect sell trade setup, just continuously dropping. This black line, in my humble opinion, is the only demand inside the governor, so inside the monthly, inside the weekly, that is worthy of slowly but surely starting to catch price. I think that's where a monthly wick might even start to form. So which tells me that euro do not be in a rush at all to start buying the euro. The only reason why euro is going to erupt today, look at this. This is the weekly candle, Friday, right? This weekly candle is a full body right now. You are aware that if NFP is negative today, and it is a disaster rug pull like ADP last month, and it's a flip on things, this candlestick is on the weekly will end with a strong wick to the upside and a green small body like this, which would mean markets have now made contact with the governing demand, and buying has started, and buying was started fundamentally because of NFP. Now, if you have a big account, then yes, and I'm talking like senior trader big account, like our senior traders, then absolutely, there's the crazy ones I know for a fact have started buying because of where their stop loss placements are, right? Most retail traders can't afford to have stop loss placements outside weekly and monthly zone because you're technically holding 400 to 500 pips. And the truth of the matter is that's kind of expensive depending on your account and your lot size, right? It's kind of expensive, once again, depending on your account and your lot size, right? So there's no way to trade, but also it affects your risk to reward ratio, because to make 1:3, you have to hold a Euro USD buy and be right for another 1,500 pips, right? Which is very unlikely. So that's why we want to scroll down and get to those bigger zones, sure, like the daily time frame, and start to see. And for me, this black line here signifies the first time markets could consider starting to buy, right? The very first time markets would consider starting to buy. So the structure might need to fall a little bit more. If the structure needs to fall a little bit more, then it's likely, just mark my words, guys, I'm using the word likely, it's likely that we have a positive NFP reading today. All right. I mean, everything that Fidel said, positive ADP, that's correct. Also, on top of a positive ADP, they actually revised their numbers from last month and said, look, we want to come clean. We messed up. It wasn't minus 300,000. We actually had a positive set of numbers, right? And then their new numbers that they brought out on Wednesday are technically more than today's speculation of NFP numbers. So if ADP is right, even just by a slight percentage, then NFP almost has no choice, but to be positive. At is it about 3 o'clock or 4 o'clock sometime today? So that's something to watch out for. And in my humble opinion, like I said, I don't see anything significantly strong. There could be 1 hour demands, H4 demands, but I don't see anything significantly strong on this Euro USD chart to catch price, unless if price disastrously falls sharply to 1,0922, which it might when NFP drops. But right now, it's looking like it's a dollar day, all right, and price will continue to go up. Dollar is rushing for that monthly supply, which makes me very nervous for my portfolio. It means I might, by Monday, Tuesday, I might need to start closing out of my long-term trades. But everything is happening a little bit quicker in the markets, right? So just to watch out for that. Since we're looking at Euro USD, let's kind of like review. We spoke about how we did not want to sell here, or I didn't want to sell here. And now it's going to be one of my biggest regrets for this week, right? Being too picky like me sometimes is my weakness. I want perfect areas or nothing, right? So this was a clean place to take a risk on markets, and markets have done nothing. I think we spoke about this on Tuesday, right? Markets have done nothing but fall ever since then. A clean PCP, a one touch. What I won't be doing, truth of the matter is trying to take a retest on a PCP on an H1 time frame. That is something I definitely will not be doing, right? So it means for me, the only buy setups, the only trade setups I have here is to hopefully buy somewhere down here, right? And market sentiment must necessitate this. So number one, DXY must make contact with some type of strong supply, preferably daily, weekly, monthly. Number two, NFP must have been a complete disaster, because if NFP is a complete disaster, it will then allow for risk, of risk on sentiment, or at least will allow for a weak dollar, right? And then Euro USD and the Euro bulls can really take over, right? So that's the only reason why this would be nice. And then I'll be riding these very carefully, right, throughout, because March, next week Thursday, we've got CPI, which could spread in the dollar, and then after that we've got the Fed interest rate hike. So all these levels here, I'll reassess my plan when price gets up here, these target points for any sells, right? But if you want to be crazy brave, given that there's NFP sometime today, you have to drop all the way down to the 15 minutes time frame chart and really ask yourself what's going on. What's going on is you've got a downward trend. Yes, you're in a governing demand, but you're going to have to ignore that today if you are serious about, slightly making a high risk trade on the monthly. If I was to want to sell, I would not sell here. It's just right on top. I would not sell there. It looks simple. I'll also not sell there. It looks like it was retagged, right? So I wouldn't take any of these sells, which means if NFP can push price up here, this would be the first place I'd be willing to take a risk. But I generally wouldn't take a trade. This is a cowboy trade, so I want you to know I will not be taking this setup with you, right? So this looks all ugly. A good NFP trade idea is one that you enter 2 or 3 days before NFP and you hold through it. So once again, we really should have taken that sell, in hindsight, right? There's nothing we can do now, right? But those of you who are going to be trading NFP, I would suggest wait for the data to drop, see if it's positive or negative, and then watch the levels. You can see here in the London session, we're about to break structure, right? So if we break structure to the downside, right, and NFP is positive, then you want some type of retest into that zone there, right? Something like that, and then continue to sell, right? But make sure you take profit just before this daily demand that I've marked here, because I guarantee you that daily demand has historical buys that have got nothing to do with war or sentiment, right? So that's Euro USD. I see someone has asked for Pound USD. Not a problem. We will get to it. We just have 10 charts that we look at every single morning at 9 a.m. And the reason for that is consistency, number one. But number two, you will slowly start to see and read charts, carefully if you keep the same charts marked up. Right. Let's go to the 1 hour time frame, which is really a good place for intraday traders to start. There we go. So I'm just looking for our marked stuff, right? So everything has followed suit. Remember with this sell area here, and we say, look, there'll be a nice place to take a trade if price comes back to cover this gap. But then this will be a good place to take a risk here first on this gray zone, because it is a very good supply, right? It is a good supply. It is one of the first few, right? The white line in front of you, just to recap, is potentially a long time ago daily area of value, daily demand, right? A strong bankers buyers area that is there. We're not sure, right, about how much of that area will hold, but we know that it's, so I'm just trying to clean up these charts for you real quick, right? We know that it is there nonetheless. So euro is weak. Typically, we've been saying the same thing. We took a lot of these trades, some of them last week anyway. So this area here, we're waiting for these lows to be completely taken out, and I think they have. So it's safe to say we can remove this white line. All these lows have taken out. So it's another confirmation of break of market structure to the downside. I just want to see if there's anything to look out for, right? One could be obsessed with this area here, but for the most part, this area is weak. This is this demand somewhere here. If I can zoom in quickly so you can see it. It's just that I know some of these places, right? So euro and euro pound is falling from a governor, guys. So what I like is, just so you know, the sell targets for euro pound is here. So swing traders, when we're doing our swing setups in the traders war room on Sunday, we know this is our target, right? We really need to start finding not only an intraday setup, but also a long-term swing setup to come all the way down here, because that's where the monthly governing chart is going, right? We've spoken about the flow of money on this channel many times, right? So there's really nothing stopping price here. Like NFP will not really be a factor on euro pound. Euro pound is on its journey. What we want to do is to at least be present for a very good retracement. That's what we want. We want a clean retracement a little bit to the upside, right? As our options are all the way up here where there's a strong gap, but on the daily time frame, this day by day on the daily time frame is starting to become a very attractive area for a retracement, right? Day by day, we've got a clean imbalance. You can see there with the Kini-Hashi candlesticks. It is the latest supply that takes out all these lows. So a supply that takes out a governing, a daily demand, or an opposing area of value, right? And it's technically linked to that H1 supply. So you would have a situation like this, because remember how you draw a supply, you need to include the wicks, right, of that area, area of value. So for a swing trade, patience is a virtue. But just put a pen in order. Just that's all it is. I mean, yesterday I showed you guys that I'm still in platinum. Platinum has been, yeah, I'm going to do the pound USD. It's just that I've got a list of setups, but we cover that stuff, right? So it's coming. Thank you for the comment. I will look at pound USD as part of the 10 charts I look at every morning in the order that we look at them, because there's a market theme that we follow. But thank you so much. I'll look at it. Right. So this is coming up. Please don't forget about this sell setup. And inside this daily demand zone, we've got that gray area there on the 1 hour time frame, right, that we believe would require some strong mitigation, right? So let me go back to normal candlesticks so that you guys can see it properly. In fact, let me just do pound USD next. Someone really wants us to look at pound USD, right? So there. So I would wait to have a clean sell setup here, which is literally out inside a daily demand, anyways, and then decide for myself whether I have a strong sell setup here, okay? Or and when I say strong, a healthy lot size, and then you can have one usual very low lot size covering the entire daily area with the stop loss outside. Bearing in mind that that trade with the whole daily area would have to be a swing trade to make up for risk to reward, right? It would absolutely have to be, right? So the 66 pips versus, an intraday entry like this that is quite clean at 8 pips, right? So this is a good place to really have a good lot size, as long as you need to be risk aware and where your stop loss placement needs to be. All right. So please be mindful of that. Right. In terms of today, look, man, it's just gonna fall like yesterday, like every single day. I tell you the stuff. If we get a retracement, for example, if NFP is fake, not fake, false. If they manipulate the report and we get a negative NFP, which is ridiculous to even imagine how they could do that, right? Then we're looking at sometimes short-term, strength in the euro. You could take a risk there. I would avoid that because the real price is up there. But if you want to take a short term, as long as you're going to get out in time before they liquidate you, that's fine. But I would definitely wait for the full picture, right? That daily supply is there for a reason, and price will come back to it. So that's euro pound. Well, let me just quickly do pound USD and then get back to our list, right? So there's pound USD on the 1 hour time frame. Now let's look at our intraday setups here, right? So we've been tracking pound, right? And I mean, I don't know who's new, who's not new, but those of you who've been around for a while, you know that pound did, pull a rug under us, right? Remember there was that broke glass effect on the daily setup right here, right? Remember there was a glass effect here where we spoke about it, and this, by the way, markets have come full circle. This was last month's AGP on Wednesday last month, right? The week before last month's NFP, right? So markets have finally, I mean, if you really check the dates, we're talking 4th of February, which was last week, the first Friday of last month when there was NFP. I mean, you gotta love markets predictability, right? So we're back here 4th of February, now on the 4th of March, and the new NFP is done. And the pound theme for a sell-off is still there. The only thing to completely be worried about is the fact that unlike Euro USD, pound is moving 10 times slower, number one. Unlike Euro USD, pound is nowhere close to a monthly demand, but just removed a big one. And unlike Euro USD, pound is dancing on top of a daily demand, right? So those are kind of like the key factors. While we acknowledge that Euro USD is a primary market and all risky assets, the pound, the blah, 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 all generally kind of like copy it. This is what it looks like on the governing time frame. You will recall that there are other assets, risk-sensitive assets like AUDUSD, NZDUSD, or NZD in general that are currently breaking rank from euro, currently very strong. So if you look carefully on pound USD on the governing time frame, you will see that markets still have to deal with the structure break. This is a demand that not only is just a demand, but actually broke this long-term 2008 structure, right, when markets fell from the 2008 crash. So that's a significant demand. That's a strong demand. Euro USD's demand was different because it was a little bit higher. It was a demand created due to circumstances, retracement. This one is actually a valid structure breaking demand. Markets made contact with it in December, and then we got a downtrend PCP. You can see markets are still moving to the downside, but I want you to know that it's not yet broken. Whereas Euro USD is already down here in the March demand with the COVID recovery in 2020. So we'll look out for that. If you go to weekly time frame, I'm going to go to normal candlesticks. You also notice that we're inside a valid weekly demand. All right, we are inside a valid weekly demand. Yes, we got a very structure, but look at this. We might be trying to fill this week. The only way we can fill this week, ladies and gentlemen, is if we go to the upside. Be careful of that. Weekly demand, daily demand on top of a monthly demand, right? So pound could be, getting ready to store up and release some stored up buy pressure value. Yes, on the daily time frame, I would agree. If you say euro, this looks like a PCP to the downside, I would absolutely agree with you there. I would also agree with you that outside of our Kini-Hashi candlesticks, that maybe there's still a little bit more of a drop left. So if we were to kind of like adjust this area here, we could get this. So let's say NFP is positive today, right? Then you could get, a further downside on pound USD. But, that downside, take it with a strong pinch of salt. All right, it's only a 70 pip drop, in the bigger picture. Take this with a strong pinch of salt, because on my left, I've got a very, a bullish engulfing pattern. Yes, markets have broken structure, but so the buyer's fib level. Don't forget this. This was not a turning point, right? Remember 2 weeks ago when we were doing this morning lives, we spoke about how buyers were here. This is a golden ratio area for buyers, right? A retracement zone, right? So markets did retrace, did use up the money in here. The zone is now negate. So obviously price had to break through it, right? So it's not to say buyers are weak. It's just to say this area did its job, right? Literally cleaned back into the supply. What was surprising, what should be surprising, the fact that the glass effect held here. Right, so if I now drop down to H4, I'm starting to see something quite, storytelling now, right? So you get these, increment like retail zones, right? And this is normal, especially just before a big event like NFP. Markets become retail technical analysis pattern friendly. They want to catch as many retail traders. They will create as much liquidity as possible for them. So all of a sudden you get range in markets. Why? Support, resistance, RSI, stochastic, all those silly things, all of them, they work best, at least look like they work best in a ranging market. And so you've got this little box range that hasn't been, literally a week old, right? From the 24th, 25th was the Friday, 25th was a Friday, up to this Friday here on NFP, where markets have just been liquidating, creating supports, creating new resistance, breaking lows, but not going anywhere. This range at about 3:15 today will break. This range is going to change for a very long time today. If you look at it very carefully on the H4 time frame, you can see a strong glass effect of a supply. That is to say, there's not much sellers left there. Anyone trying to sell up there is now gambling, right? So you might be right, you might be wrong, but selling up here is no longer a viable option. Whether it was a sell of a resistance, whether you're trading supply and demand like me, selling up there is not a good idea. Given where price is right now, markets are creating a PCP. Yes, value-based demand, but not the strongest. It's got no confluence, it's got no support, right? So you want to be very mindful of that. My assumption is markets are going to just keep falling. My assumption is, look, for the most part, you might as well, catch a break out of this Talitha area, right? I don't know if you know what a Talitha area is. It's a name we gave in our trading course when we're talking about PCPs, or specifically consolidation ranges in PCP structures, right? So markets will fall. Will this area hold on the 1 hour time frame at about 2 p.m. today? I don't know, right? So this is London session yesterday. This is how markets opened yesterday. I always tell you guys that you must track market open and market close. So this is at play right now. I suspect New York markets are going to open here. I suspect that. And if that's the case, well, let's have a look at what time NFP will drop. Let me know if this is helping the gentleman or the lady. I don't know. Sorry, I just have names here who asked for pound USD. Right, so there's pound USD on Friday, so it's going to be 3:30 p.m. Right, 3:30 p.m. I suspect markets will open somewhere inside the zone. Now, what does this mean? Well, remember, if NFP is strong, very bullish, outside of what markets have priced in already. What have markets priced in? Markets have priced in 407K, right? Logically, remember this, markets have priced in 407, but it is a financial analysis to say they are actually worried about jobs. Why, Leroy? Because in January, we actually got 467. So they priced in a little bit lower, like lower, right? So lower. So markets are worried that too much good news over time is impossible. So we got 467 jobs, not forecasted, the actual jobs created. And now we think the economy might have started to stagnate. We saw terrible stock numbers. We've got a war going on. We don't know, blah, blah, blah. So let's just aim for 4 something right now. But the ADP number is, yeah, but we found 475. So ADP is technically greater, right? They're like, look, man, we found 475 jobs, which is already bigger than the forecast, right? So that's why I'm saying if NFP is negative, this would be an incredible smart money manipulation move, right? Something that I can't even predict. That's why I never trade fundamental anticipation. I watch the number. I'll be here. No, I won't even be at my desk at 3. I have therapy at 3 o'clock until 4, which is even perfect for my trading psychology because I can let NFP numbers drop, drive back home, be in my home office by 4:30, and then at 4:30, I would have seen markets create some levels. In my experience, looking at studying previous NFPs, the 15 minutes time frame is a good one to be with. You'll notice when the news it creates massive volatility. You might even get a spike. So anyone buying here will get liquidated. If markets open right here in pound USD, anyone trying to buy here, number one, will get liquidated because of volatility. That's number one. But number two, what if this is true, right? You're going to get liquidated because of volatility, but also because the dollar will be strong, which will naturally weaken pound, right? If it is. But if NFP is a rug pull and we don't even get 407, so let's say we get anything below 400,000 jobs, so 3, whatever, anything below 400, it could be 360, 390, doesn't really matter, anything below 400, then you'll know that dollar is going to be weak and pound is going to want to soar against the dollar, and that might still even cause a little bit of this, right? In terms of market structure, as I conclude NFP and pound USD, in terms of structure, as an intraday trader, I am forced to think that markets are going to drop between the London session to now. So I'd be trying to sell. And I'm forced to assume that when the New York session starts, markets are going to go up. I'm forced to assume that because of the structure in front of me, at least on one chart. We need to see euro, we need to see gold, we need to see all those things first. But also because of this demand there. But if that's the case, that at London, in the New York session, markets are going to go up, then it means, guys, that we prepared for a rug pull, a negative NFP. I logically don't think this is possible. I think that would be crazy. I think Fidel is absolutely right. Initial job claims dropped by 17% or something weird like that. The amount of money spent on unemployment checks used to be 6 million, dropped all the way to 1.7 something, right? Powell said the labor market is doing great. It's tight, but doing good. What I do think a lot of retail traders will get to look out for, right, in terms of NFP, is this. So you could get a positive NFP. This I told you guys doesn't make sense. I told you this about a week ago. Why on earth would average hourly earnings go down? They would only go down because they do believe that the number of jobs is going to go down. So from 467 to 407, right? which is interesting because again, we've got a positive ADP, right? We know ADP sometimes is drunk, but sometimes they're not, right? So this would be interesting. Like if you get a positive wage hourly earnings, means the wage spiral is continuing. More people are getting paid more, and you better get a positive NFP. But you want this number to be positive, and the unemployment rate. The only way the unemployment rate can stay positive is if price goes. It is number 3.9% comes out as 3.9 or 3.8 or 3.7. So if it goes down, that's positive. You want to keep seeing a reduction in unemployment rate. So watch out for all this stuff. My advice is never trade hot, right? There's no need for that. You don't have to use all your capital, maximum lot size, because that's what everyone is doing on social media. You can simply watch price, study it carefully, and then react with all the data. Money is not going anywhere, right? If you read the books I keep recommending, you will notice that is literally how Goldman Sachs, JP Morgan in the Adventures of a Currency Trader, that's how they move. Fridays, they watch the data and then they make a decision. Now, on our intraday time frame for pound USD, since we are here anyways, like I said, it is this 1 hour time frame of how markets opened yesterday, right? That is in play. That's the question. Will price come back here? And if it does, the completion of this intraday cycle will be at that supply up there. None of these trades look appetizing right now. If you go to the 15 minutes time frame, we are now 1 hour into the London session. You can see for yourselves, markets opened here, somewhere there with a strong spike up, and in the last hour or so, price has been sitting all the way down, trading a PCP. You will see by 11 a.m., 12 p.m. Today, these lows should be taken out, and if they are, right, that's a clean signal for you that markets want to see if they can push down there. Remember, EURUSD is saying something similar as well. EURUSD is now inside a governing demand. EURUSD is inside a normal buying big order block, right? So if pound USD digs a little bit deep, EURUSD digs a little bit deep, they might be preparing themselves for the biggest rug pull ever, a negative NFP, which would not make sense to me. But these things happen all the time. Look at Ukraine. Ukraine not robbed, but they lied to people with the crypto. They promised everyone an airdrop and then canceled it, right? That's a rug pull. If Ukraine was a developer, would be protested and canceling them, right? I definitely did donate for the cause of the war and donated before the announcement of the airdrop, but I just found it quite interesting that they could do such things during a war, right? EuroCAD, we've got a few minutes left, so we're just going to look at a few charts. I'm going to look at only charts that might be relevant to NFP today, if that's okay, so that we can just see what we have going. So where are my lines? Let's go to the 1 hour time frame. So that's not where I do my intraday trades. Euro, there we go, fantastic, right? So EuroCAD also, you see this, all these Euro pairs, all of them are approaching significant strong demands, right? And I'm telling you that the thing that could drive them there are two things. Number one, negative NFP, straight drop, right? And then that, for me, I'll be like, be careful to buy, because it's positive NFP, strong dollar, euro drops is what I'm trying to say. I'll be like, be careful to buy, because that's not healthy right now, right? If money is moving to the dollar and gold, be very careful, right? Got a very nice demand here, completely unmitigated, very strong area to buy from, so that would be a nice place to look out for. The usual trend on EuroCAD is down, right? EuroCAD is just down. It has been down, it's just all sell setups across the board for Euro. What matters now moving forward is that the trader, goes into this particular chart mind open. If you're taking any buys, you're taking buys because you have a lot of data to support that, right? If you're taking any buys, you're taking a lot of buys because you have a lot of data to support that. And the data to support that is quite simple, right? The sentiment shift has changed, right? With nuclear on the table, risky assets do not like that. They're not about that life, right? So this is where we are today on this thing, right? So, right, markets have equalized yesterday's bottom where price opened, and markets are attempting to go up, right? And you can see that it does this every day. Like, look at yesterday, it went up just to fall. right? But it wouldn't have, I unfortunately would not have been able to trade it because it didn't even come remotely close. Well, it came close, right? But that's not how I draw my supply. So I would have drawn my supply something like this. Then my area of competition, had I wanted to trade this yesterday, would have looked something like that, right? So I personally, for me, I would not have been, triggered in this trade. Number one. Number two, we want to catch higher supply. So these areas marked in gray and yellow, something somewhere up there. But yesterday, price just played around, no real movement, no real money, right? Trading, you want money to get money, you want trends, right? This silly buy and this drop is literally what a good intraday trader should be able to spot. As long as you're on top of it, opening and closing, which is not my style of trading, right? So markets still have a little bit of room to go. These upward areas to sell will be at play the moment price comes down here. A daily demand is quite strong, right? So just be expectant of that. I don't see myself catching the buys. I'll only make that decision next week, Monday. We do this every day anyway, so you'll know where I stand. Right, let's look at something that will have an NFP effect, like gold. Right, I've covered golds many times, told you guys, some people bought here, Wongi and crew. I did say this is a good place to take profit. Price came back once. If you missed it, I told you, well, there's a nice demand here. Let's see if it pushes price back up. Markets have come back on the dot, and I'm hoping all take profits have been adjusted. If you're still in gold because you're trying to swing for the money, here are a couple of things to consider because of NFP. Number one, gold has to deal with a strong imbalance or an H4 supply, which is technically has been tagged. That's why I say to take profit there. All right, and if you really think about gold, you must think about the overall logic, right? Energy prices have been doing very well, but yesterday we also saw signs of markets going, okay, enough, this is getting crazy, right? Look at oil. All right, so oil pushed almost close to that 120 target and stopped at about 116, right? $116 per barrel. And then oil was like, all right, this is a bit manic for me. Excuse me, if I go to the weekly time frame, I can show you why. I don't know, is there a reason? Yeah, there is. There, right. So you see there on the weekly time frame, right? Markets never forget any areas of value. So it's time for oil to retrace because markets once again have arrived at a predetermined supply, and this supply has been in effect for a while. So you can see if you draw the supply holistically like that, you'll get one, and then you'll get that, right? So markets came into the supply in 2011. Markets came to the supply in 2013. Markets fell like ridiculous in 2014. And all these, by the way, are above $100 per barrel, right? Just remember, right? So when you talk recession, right, these are the kind of like charts we're looking at, right? And now markets have come back into the supply a little bit deeper, and now price wants to retrace. We did create some bullish engulfing, strong impulse moves. Excuse me, on the weekly time frame. So I would not be surprised if sooner rather than later markets make some type of logical agreement to retrace. You will see that the oil tycoons have agreed to do nothing. They're not going to do anything to interfere with price right now. They just want to see. They just want to see what it feels like to be within the glorious hundreds and make all this type of money due to an energy crisis. Granted, on the daily time frame, all we have in front of us, we'll see how this candlestick ends today, how it closes. We'll see this in the war room on Sunday. But if this thing closes green and above, all we have is a PCP for more upside movement, right? I'm not chasing price up there. Someone was buying energy EFTs yesterday and within the academy, and I made him sell them back, right? It's just too late to do that. I literally said, nope, we're not going to spend money on, because energy EFTs should have been bought, somewhere down here at $80 per barrel, even lower, 73. I mean, this is not even too long ago. This is the beginning of the year. Like if we really wanted to invest in energy, we had multiple opportunities at the beginning of the year. We covered this demand in the traders war room, right? You can see it's marked out. And then we had this trade idea, just a clean trade idea right there, right? And you can see how wide our uptrend has got, right? So there's no ways now you can decide it's now the time to buy all EFTs right at the top You never buy this high. You never, ever buy this high, right? So we can take a trade retracement somewhere down there because of structure breaking and small time gaps. But for the most part, oil is starting to slow down, and so is gold. Be very careful of that. Now, why would gold be slowing down? Well, because there's NFP today. And if NFP is positive, which most of us believe it will, right, because of the data we've been given, right, outside of basic market manipulation, most of us believe it will be positive, right? Then gold might need to slow down just a little bit, just for now. Now, if you look at the bigger picture on gold, you can see that gold is literally playing around these daily demands, daily supplies, I apologize, right? And there has been a fresh touch. And so this yellow zone up here, you know, I would say shy away from calling this the touch, right? You want, and anyways, a retest would be a nice deeper entry, something like this. A retest into this area would be like something like that, right? So you could get something like that into the long-term, you know, gold structure picture before another strong push to the upside. And so for that reason, I think gold is actually being very cautious about how it moves today until the data comes out. But until then, we are bouncing at H4 supplies. Nothing really clear on the daily, just long wick. So there is only an H4 supply currently holding price down. But market buyers, gold buyers, are still extremely bullish, building PCPs just outside of the supply, going in for already a very close second retest, right? So sooner rather than later, money will prevail. By money, I mean glass effect. But there's more money on the buyer side, price will move up no matter what. And I know, having glanced at COT, I know gold got a lot of boost last week, and I don't see why it wouldn't have received a bigger boost this week, right? So it's really upward and onward for gold. Now, if NFP comes and NFP is positive, dollar will be strong. If dollar goes up, then gold needs to kind of like find a new place to reset before going up again. If NFP is negative, right, negative, then you can imagine your DXY chart will have to drop to those gaps, to go fill those gaps. And because of that, gold, the dollar would, you know, take advantage of that moment and start to push price up. All right, so we saw that Bitcoin is negative because of a couple of things that happened yesterday. Rug pull, sentiment changed on the nuclear stuff. So you can imagine that your equities had to pump the brakes. And you see, Nasdaq has been stuck in the same place for a very long time. And I told you guys, right, that yes, you can call it a recovery. Yes, we can start to look at value-based rallies. But remember, I want to be in a consistent buy. This is not a consistent buy for me, right? For some of you, you guys love taking 17,556 million small Nasdaq buys here so that your accounts can go up. If they are real accounts, good for you. But if you're just doing that on demo, just remember what you're teaching your psychology, right? It's not, you're not fooling anyone on that kind of stuff, right? Make sure you do what is good for you in the long term. And the long term, what you want to see in your equity graph, right, is your growth of your account doing something like this. Yeah, you have good days and bad days, but your capital was $100, $300, $700. It kept going up in the long term. You want to stay in this business for a very long time. You want to protect capital and grow it. Now, Nasdaq did take out this supply a long time ago. We kept it in because markets also showed signs of struggle. Right, and the truth of the matter is, if you really look at Nasdaq carefully, all it did was break us an H4 supply, and I've marked it gray because there's not a significant strong supply, and then it created a new one, right? It's like, yeah, so just so we're clear, this game is not yet over. Remember, I'm only going to be bullish on Nasdaq after FOMC 16 March. You know, I'm only going to be bullish on Nasdaq after Nasdaq takes out these yellow supplies up there, because these yellow supplies are strong, right? So Nasdaq, you know, in the futures is down, but you can see she's slowly but surely in the London session starting to run up. Run up where? Run up to what? What are you? When I look on the H4 time frame, I have to ask myself, well, what's the plan, right? So you fell here and you started selling last night because of this nuclear stuff. So therefore, you put sell orders. Okay. And now retail traders are awake, and you seemingly see some buying. Okay, this is not an institutional demand, right? This is more like a Morningstar pattern. So we know that there are retail traders pumping this market up. There's a bearish engulfing pattern. It's institutionally placed, right? So you can see the difference between the two imbalances, right? So retail traders are pushing something up that smart money pushed down, right? So, it's for me, it's like, geez, well, how is this not going to end in tears for someone in the long run? Yes, this area is exhausted from selling, but, markets have been more sentiment driven. Now, if NASDAQ is super strong because of a positive NFP, then I'm pretty sure NASDAQ will then just, might potentially fall if most of the money floods to the dollar. But while we're here, let's just quickly have a look. Last month, NFP was positive, right? Yes, it was. And the date was the 4th of February, last month, 467. So can we just quickly go to NASDAQ, 4th of February? Those of you have time. I have time. Do you have time? We have time. Right, thank you. Right, there it is there, 4th of February, 10th, da-da-da, 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 da-da-da. I'm on H4 time. That's why it's taking forever. This is the second. It will be ADP. ADP says negative 300,000. He says COT 78% on gold. All right, that's quite interesting, Sarit. Cool, man. I'm so out of touch with my COT in about, maybe I'm about 10 days behind or 11 days behind. But 78 is quite a cool, bullish, number. Blessings for that, for sharing that with us. Right. So this is Wednesday ADP, where we had a minus 300,000 on NASDAQ. You can see NASDAQ fell up until NFP. Right. Pause. What happened on the morning of NFP that month? NASDAQ fell into a demand. First, number one, fell into a demand on Friday, right? And then somewhere in here between these two candles, NFP was positive. So that's the influence of a demand and a strong NFP. And then on that Friday, on the 4th, up until Monday, NASDAQ slowly but started to price that movement in, and then a big drop, market crash happened throughout the whole month of February. Now we have almost a different type of setup, where just before NFP, NASDAQ has rallied into an H4 supply. Well, they listened to the H4 demand last time. Does it mean they're going to listen to the H4 supply this time? I don't know. We'll have to see how they give us that news, right? But just be very careful. Structure has a tendency of being absolutely brutally honest with you. But NFP numbers can be fudged, right? So that's what's going on there. I've talked to you guys about gold, NASDAQ, EURUSD, DXY, Pound USD. I think we can end it there, guys, fundamentally because of time. This is supposed to be just an hour. I hope this helped you. There'll be other trade ideas like AUDUSD that you can look into. But like I say, AUDUSD is on a rampage. It's literally about to take out a daily supply. It's almost like something is chasing it, like it needs to remove this daily supply before excuse me, a strong dollar comes into play. Because when a strong dollar comes into play, like NFP induced strong dollar, please remember that this thing is going to have to fall. Look at how it quickly filled its gap here. Clean filling up a gap. There's a gap there to the downside. Markets opened up on a demand, very beautiful buy, and rallied nonstop, right? That was a good trade to take if I'd been paying attention to that gap there. Gap trading is very, very, very profitable. Right, ladies and gentlemen, I hope this helped you. I hope you feel you got some use value out of this. Good luck today. Remember, NFP is a 3-stage event. All right. Dude, fantastic. I know Dark Side Studio is my brother from the Philippines. Hope you're good, man. I owe you a Telegram message, but good to see you. Good to see you. Thank you for the compliment. Right. Just remember, guys, NFP is a 3-stage event. It's not just about non-farm payroll. Right. You need to see your average hourly earnings. Because remember, you could get a positive NFP, but if this is bad, and if the unemployment rate is bad, right, which is weird, but it's happened before, that contradiction gives mixed signals in the market, and you get multiple spikes, and you think, markets are fake, or when you just simply misunderstood the information. This entire 3-step process here is a big deal. All right. Shake my hand, everybody. Have a blessed day, and I'll see you on Sunday for our usual war rooms. Good luck. Goodbye. Yeah. Check out the link, I guess, in the description for all things 365. My Wealthy in 3 Years stock notes drop Saturday tomorrow. So you probably want to be a part of that if you're not already. I've invested in all things crypto, good stocks, long-term holds, the whole